Hi, fellow traders. This is Larry Williams, and I'm pleased to be back here at Stockcharts.com to give you my impressions of what's going to happen in 2025. Kind of a general overview with some very specific comments. So grab your pens and pencils and let's take a look at what the future holds. The big thing is, can we know the future? Now, a lot of people say you can't. A few of us say we can. I remember in the 1960s, 1970s, before we had the internet, of course, I kept the National Enquirer because every year they wrote a prediction. Their psychic seer said that Elizabeth Taylor was going to die year after year, and she never did. The one year nobody predicted she was going to die, yeah, that's the year she died. So I think it's important to go to the source of predictions. So I'll go right back to my 2024 forecast report. And in a nutshell, this is exactly what we wrote, the very first paragraph of the report. 2024 will continue to see higher prices, erratic but higher. None of my fundamental indicators are even close to giving a sell signal. Be bullish or be out remains my mantra. In retrospect, that was pretty good advice for 2024. So, some of you know I've been doing my annual forecast report for, I don't know, 18, 20 years now. We haven't been perfect on every call, but we've got most of the major moves in the market. I think we can tell the future based on cycles and fundamentals, which is what I'll be talking about today. Here was our forecast for 2023. That's the blue line. You can see what actually happened real time in the black line. That's how it actually came out from the forecast report. So this isn't just a one-hit wonder thing. Here was a forecast for 2024. That was out of our forecast report last year. That's what prices should have done in 2024. And in retrospect, that's about what we had, a nice big bull market. Also, we show this chart in my 2024 forecast report. We're going to look at it again a little closer up. But the forecast report, remember, this was done late 2023. Gold line higher, higher. Yeah, that's exactly what happened. This has been a pretty dominant cycle in the marketplace, and it continues showing some dominance in the market. In fact, here it is, a closer up view of it. You can see what took place. This is what actually happened in 2024. There's the gold line that we had projected back here. And this is how price actually turned out in the marketplace. So you can see it pretty much paralleled. In other words, the past can be used to predict the future. So you can use presidential cycles, which have been a pretty good way of predicting what should take place in the future. If we look at re-election years, that's what this was. This is the general price that prices followed, pattern rather, and that's what happened again this year. So my point is several things like the presidential cycle. There's some very long-term cycles in the market, some short-term ones. I'll show you my really close short-term at the end of the report. Today, you'll see what I think is going to happen over the next month or so as well. So it looks to me like we can get a pretty good view of the past. This is what our forecast was for 2024. And that's the blue line. This was published a year ago, and pretty much what happened in the marketplace. So again, is it specific every single day? No, I'm not that good. I think that's probably impossible, actually. So yes, I think we can get a glimpse of the future. It's not going to be precise every single day, every single high low, but a general roadmap to follow. Yes, I really believe so. I think we've proven that for a lot of years now. But here's the important point for 2025. I think most of the people in the cycle camp are going to be bearish this coming year, and I won't be in that camp. Why? Let me show you. I think that what we're going to have for 2025 is what I call a Clint Eastwood market. There's going to be good, there's going to be bad, and there's going to be some ugly. This is not going to be an easy market at all. Why? Well, first, let's look at the good, because there is good here coming up in 2025. First of all, there's no recession in sight. Employment has been pretty good, though the employment figures started to bounce around a little bit. So I want to watch out real carefully the first 2 months of 2025. We need to see a pickup of employment. Now, those of you who subscribe to my stock letter at stockcharts.com know we had a forecast that there would be a little uptick in unemployment and a little uptick in inflation. That's what we're seeing now. But remember, go back and read those letters. That we're going to see that turn back to the downside. So it should get better after the first couple of months of 2025. But that employment is really important to the stock market. So pay a lot of attention to this one. Cycles, as I'm going to show you in a moment, I think they're pretty bullish for this coming year. And of course, we have a president. This is his first term in office, and it doesn't matter who the dirty dog is in office. Typically, the president's first year in office has been good for stock prices. So that's the good. Business is good. Here we see general business conditions from the Federal Reserve System. Wow, we're way up here. So business conditions have been good. They haven't been down here like we saw in 2016 or 2008. Business has not been bad, and that's good for Wall Street. People have jobs. Now, typically, we can see the recessions are in gray here. When we see a big decline in people having jobs, we start to get into recession. Well, we've been seeing that decline primarily because of the huge increase that we saw after the COVID epidemic. But now this is maybe starting to turn up. Again, this is when we really have to watch carefully here this coming year. How do jobs handle? We need to see a pickup to make certain that we don't get into the real ugly part in the stock market. One of the best indicators of recessions is a smooth U.S. recession probabilities. It's available for free on the Federal Reserve site. And well, it's way down here. We're not even close to the area of where we've usually seen recessions. So that's positive. Now, an interesting point, though, recessions usually happen after the stock market tops, and they always, recessions get end after the stock market bottoms. I don't think I found a simple example of when the stock market did not bottom before the recession was over. In other words, stocks lead the recession most of the time. So just think about that. Stocks have been really strong, which would suggest that we're not close to a recession as well. Another good thought. Well, the bad, oh, here comes the bad. Hold on now. 2024 has been a really strong market. So guess what? A lot of people have a lot of profits. What are you doing to take profits? Most people sell. So we've seen some selling, pretty serious selling coming here the last few days, the next to last week in December. Those sellers are out there. Also, I think a really big issue, what is Donald Trump's tariffs going to do? I happen to have some real background in this I'll be sharing with you in a moment. And how willing or unwilling is the Federal Reserve System to step in and do something to help the market? What's this new Congress going to do? Is Elon Musk going to really cut back everything? And if he does, what will that do? So there's a lot of bad out there. So the S&P and NASDAQ are up close to 30% this year. So a lot of people with a lot of profits, and you're going to see some selling probably right around the first part of January. Maybe that's what we started to see the last few days here. People are taking profits. Usually they want to postpone until the following year. So we may see a washover of that a little bit into the first part of 2025. So keep that in mind. Strong markets, great sellers. Trade wars. Look, I love this cartoon. Trade wars are easy to win. That's what Donald Trump's going to do this coming year. Oh, hand me another tariff. We really need to understand tariffs this year if we're going to understand the fundamental economics of the stock market. So let's look at this. I love this quote. I'm in favor of a high protective tariff. These are my sentiments and political principles. Donald Trump? No. Abraham Lincoln. So there's been a long history of tariffs, starting with Alexander Hamilton, who began his career right here where I live in St. Croix in the beautiful U.S. Virgin Islands. Alexander Hamilton went from here to be Secretary of Treasury and insisted on having high protective tariffs. Abraham Lincoln just followed suit with that. So we're going to see tariffs here. Let's take a little deeper dive into what that might mean. So here's an example to understand if the Donald puts a tariff on shoes from Mexico, well, the retailer buying those shoes has a decision. He's either going to pay the tariff or he's going to find a new supplier with a better price. Well, what would you do if you were the shoe salesman? You'd probably look for a new supplier with a better price. Now, that can come from another country that we don't have tariffs with, or Hamilton's idea was, no, we'll build it here. So American factories can produce these similar items and they can be competitive with that tariff price. Let's say a pair of shoes from China is $1. The tariff is $9, so the shoes sell for $10. Well, we can probably make that shoe in America for $10. So we're now equal with the Chinese pricing. So that can actually create a lot of economic growth, jobs, which is so critical to the stock market. So there's a possibility that tariffs can work well. During the 2018-19 China trade war, we had 50% tariffs on some things. So I don't know quite where this is going to go, but I do know this. There are really two types of tariffs. They're on outputs. That's something like a television set coming into America. You could put a high tariff on that because then we can make television sets here that would be competitively priced to the high tariff TV. Or there's inputs, items that we can make things with. So you ship transistors into America, whatever, but we're going to make radios out of that or chips. So we can make something with that. That item may not have a high tariff because we're using it to produce something. So you look at tariffs really as a finished product or is it something that can be used to go into production. And I think if Donald Trump does this correctly, we're going to see tariffs on outputs, finished products versus the input items. That's what I'm going to be watching. I don't know Donald Trump. I've never met him. I don't know what he's going to do. And I know what I need to watch. That's what I need to watch. The China trade war experience is interesting. We have some data on that. One report, Liberty Street Economics, find that a fall in firm stocks prices on tariff announcement days is associated with significant decline in firm performance. So get ready for shocks. This is the good, the bad, and the ugly, right? When we see news announcements on tariffs, expect the companies involved to have substantial short-term dips in the marketplace. You can prepare for that. But does it really matter? This is kind of an interesting chart. Here's Joe Biden's stock market. Here's Donald Trump's stock market. Here's Barack Obama's, George Bush. But you know what? The market rallies. The long-term trend of the market is to the upside. So sure, these things do cause violent swings in the marketplace, but the overall move in the market tends to have a bullish bias to it. So we do need to keep that in mind. Industry is not at full capacity yet, so that's a problem. Industrial production is coming down in here. That's not necessarily positive for the markets. This is another one of those things that's, could be a lot better than this. Would like to see a market like we saw in 2009 to 2019, 20, where an industry was at full capacity. Well, we're not seeing that. Now, the side of that, of course, is that they could get to capacity, but will they? We're going to enter something like we did in 1980, where for almost 5 years we were not fully utilized. So we have to watch this one carefully, but it's certainly not in a healthy position. You can see industrial production. What are we producing is also coming way down. Now, this is one you want to watch quite carefully. It's a Federal Reserve industrial production total index because we need to see a pickup here. If this starts to roll over and come down, we're going to see trouble in the stock market. This is one you can monitor on a monthly basis at the Federal Reserve site. So watch this one carefully because we'd love to see a breakout to the upside, right? That would be really positive. We may not get that. A breakout to the downside would be negative. So this is an indicator you can watch and pay attention to. Money supply drives everything in the world. We saw a massive increase in money supply in COVID. We saw at the low in 2008. Well, we've seen a large increase in money supply. Look at that, how money supply has come up. This, of course, is the annualized rate of change of money supply. So this, some people think causes inflation. So we have to be a little careful about that. We've seen a big increase in money supply here. The ugly. Oh, this is the ugly part of it, and it is not pretty. So make certain you pay attention to this. The Shiller Cape ratio, the Dow Jones PE ratio, and the yield on stocks are all ugly, ugly, ugly. Oh my gosh. Let me show you. Over the last 6 years, the average PE ratio of the Dow has been about, I'll call it 21%. It's currently almost 40%. It's 54% higher than the average. So the current P ratio is really high. And there's a great correlation with low PEs and massive stock market rallies. The other side of that coin, high PEs, market declines or markets don't go anyplace very quickly. I'm going to give you some more data on this. This is the Shiller, Professor Shiller's CAPE ratio is now 38.5. Well, when the CAPE ratio was above 26.4, the real return in the following 10 years is only 0.9%. Well, we're way above that now, right? So we have some problems here. Let me show you going all the way back to 1880s. Here's the CAPE ratio in black, the Dow Jones Industrial Average in red. And we see when it gets high, we start bear markets. There's 1929, and we see in the 38, 36 bear market began. This is in black, of course, is the ratio, kind of like the PE ratio. Here it is again. We see it. There was a 1936, I think that was bear market. It got high again in the 60s, and look what happened. We went down. Uh, if you don't want to see this index high here in the 1990s, now this is where it catches people off guard. It's really high, really negative, but markets continued rallying. Eventually, though, they did correct. And they continued staying high, and eventually they correct. And we're currently very high in it. You can see that, again, the Dow is in red and the CAPE ratio is in black. We're at a really high reading in this. So we do have problems that suggest, well, what does it suggest? Well, let's let the numbers tell us what it suggests. Remember, the ratio is now 38.5. When the starting CAPE ratio at the first of the year was 8.6 to low 9 as its high. The average performance the next year was 9, 10%. But the higher that ratio gets to 33 or 44, about where we are now, the next year average return was only 0.9%. And notice this is where the bear markets start. This is the ugly part of this coming year. The worst return was 6%, 4%, 3%. As that CAPE ratio goes higher, look what happens to the worst performance. It gets substantially worse. So now how do you correct out of this? A bear market or substantial increase in earnings. There's only two ways out of this situation. We are in a bind. We're in a box right now because of this high CAPE ratio. You only get out of it with a substantial increase in earnings or a bear market. I do think a bear market is coming, not yet, though. Okay, now I've used a lot of you have read my works know I've used a formula based on the Dow Jones PE ratio. The formula says we expect the market to underperform in 2025 by almost 6%. On average, the Dow is up 10.4% a year. With the current PE ratio, it suggests 6% a year. So we're going to underperform the averages, which that tells me, and this is critical here, that yeah, we'll be in an uptrend in 2025, but it won't be one of those runaway, the horse that run out of the barn. You can never catch them. They're going to run, stop, start, up, down, back, forth. You want to sell the big rallies, buy the big breaks. This is going to be a trading range market with a bullish bias to the upside. Bullish bias, I think, is clear. That's going to be there. However, the fundamentals don't justify a runaway bull market. Now, this was just released today. This is a Livingston survey, which began in 1946. This is the oldest survey of forecasters. Now it's handled by the Federal Reserve Bank. They do it twice a year. They're projecting 1.9% annualized growth for the first half of 2025 and continuing into the second half. So this is kind of backs up what we see from the Dow Jones PE ratio or the Shiller's numbers, that we're going to have some growth this coming year, but 2.8, 3, 5%, most likely not. What does that mean for stock prices? Yeah, the companies are going to make money, but not hand over fist, which means we probably are not going to have that runaway bull market. So I'm going to go now from that contextual background of fundamentals to my cycle studies, because they're very specific and can give us some ideas of when we should be in or out of the market. My very long-term pattern, I showed this a year ago to you as well. This red line is about where we are now. You're going to see this in a moment. So let's go to the next chart. We have this time frame. This is going back to the 1845, where for a long time prices really went sideways and then down, long back and forth. Then the big bull market begins. Then we see in 1845, we really don't go anyplace. Then the bull market begins. Here we see in 1900, for a long time, we don't go anyplace, back, and then, whoa, then the big bull market begins, right? And then in 1966, when I started becoming really active in the market, long time back and forth, and whoa, then the bull market begins. And this is where we are now. We're at the start of this long back and forth, up and down, in the next major bull market starting about 2038. Oh, we're going to have some big rallies in there for sure, but more of this type of a market, or this type of a market, or this type of a market than where we just run straight up to the upside. That's my long-term expectation. That's how I see it. So The very long-term view, though, if I really blow this up, says that we continue going into 2025. This long-term cycle, which is peak out here, turn the corner, come up. It suggests that we're not going to see the end of this in 2025. That's good news. A lot of people have read my books and know that usually years ending in five rally. So there's a bullish bias there as well. I will cover that in my annual forecast report. It's not necessarily always true. As a general idea, here you are, as a general roadmap for 2025. We're going to see some selling pressures first of the year and generally up and down market. But that market, as I mentioned, I believe will be higher this coming year. Now, my 2025 annual forecast report will be released December 31st, where I get really specific, all major stock markets of the world, all major futures of the world, metals, bonds, currencies, softs, grains, and 30, maybe even more of the most actively traded stocks. And yes, Bitcoin, will be doing Bitcoin too. In fact, I'm going to show you a Bitcoin chart in just a moment and some stock market forecasts as well. So just remember, you want to see the 2025 forecast report, go to ireallytrade.com and sign up there. Okay, now let's look at a shorter term view of the market. This is going back to 1998, lows, 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 general pattern, the market, low period, low period, low period 2012, 2014. There, generally speaking, look where we are at the first of 2025. General path starts to get bullish, maybe the second, third month of 2025. Specific timing tool? No. Good general timing tool? Oh, yeah, one of the best, huh? Yeah. Very short-term cycles say we come down right here, right now, into just about the end of the year. This is a daily chart here of the NASDAQ, by the way. And it also suggests, and look how those lows come pretty consistently here. We're coming into the area. I know a lot of people got really scared by the decline in the last couple of days, but we can see a rally forming off this into the first part of the year. Some selling will come in, as we talked about. Profit-taking selling might be substantial, might stop some of the rally, but we're coming into a short-term reversal point back to the upside in stock prices. Big question after politics. Is America cracking? What's really going on with America? Oh, I love this chart. This is America's richest and poorest states. Our richest states are Washington, D.C., New York, Massachusetts. The average income is what, 259,000 in Washington, although DC lobbyists, I guess. I would be careful in the real estate market too this coming year. That's covered in my annual report as well. New York, $110,000. U.S. average, $81,000. The third poorest state is Arkansas, Virginia. The second poorest state, our poorest, is $51,000. But look at that. Those people in Mississippi are making more money than UK, France, Italy, or Japan. Certainly America is not falling apart. Average Canadians, about $55,000, Germany, 52. Our second poorest state does better than those other countries. So, I see a lot of people didn't like Donald Trump. They moved out of America. Oh, yeah, well, this is where they're moving. So, no, America hasn't cracked. It hasn't fallen apart. The future of America, as Ronald Reagan said, is still in front of us. I want to talk now specifically about AI stocks. They've been really hot. Is a bloom off the bush of AI? Is this one of these bubbles that's all over? Let's look. What can we see about the future? Well, I think I found some new things we can see this year. This is the ETF for AI stocks, BOTC bots, right? I found something really interesting. I can determine, notice that blue line, when we have a high probability of the market rallying, starting in mid-February, there's an 85% that this market will rally. This is a forecast we can make. Also, late September, we have an 85% probability of the ETFs for the AI or AI stock in general to run. In the meantime, we have the red cycle forecast of what this market should be doing. So we can really say, yeah, this is really when you want to get interested in the market. Let's look at Caterpillar. We have a 75% chance Caterpillar will rally during the blue line, which tells us about the first part of July, we want to start looking. In the meantime, we know this is the cycle forecast for Caterpillar, but this comes the sweet spot for Caterpillar. IBM, We have a 75% opportunity for a rally. In other words, 75% of the time. And this blue line is not a seasonal, it's a cycle, a combination of cycles. Gets really positive again in August. In the meantime, we have a pretty good idea there'll be a bottom here, a peak here, a bottom there. That's what we can now see for the future. So it really expands our view of the future. Bitcoin itself, well, let's take a look at that. Here's starting in June, we have an 84% opportunity for a rally. That's going to be your sweet spot in Bitcoin. For GBTC, at least, this is one individual coin, right? Ground trust. And meantime, we see down, up, down, cyclical low, cyclical high, cyclical low. That's what we can now see in the 2025 forecast. I've taken my work that far, which really helps us figure out, isolate when we want to really get bullish or bearish. Well, there again, you can go to ireallytrade.com to register for it. I hope you've learned a lot today, that you do have a view of the future. You know what to look at in terms of what's important in the marketplace. The fundamental data that I shared with you, you might want to go back over and look at that as well. But I think we're going to have a decent year in 2025. Runaway bull market, no. Opportunities to the upside, yes. The crash that everybody's been talking about for 10, 15 years, these guys have been talking about a crash every year. No, it's going to be a tough market, but the bias will be to the upside. So this is Larry Williams, wishing you and all my friends at Stockcharts.com and Stockchart.com users for 2025, good luck and good trading.